Moving on with the second part here on basics of market geometry with the Australian dollar, US dollar on the daily chart. And on the first part we lay down the rules of market geometry, basically identifying support and resistance levels on the left side and then projecting them on the right side to find places where market would hesitate, and we should look and try and buy binary options, either call or put options, depending if the area represents a support or if the area represents a resistance. Now, it is quite interesting that the expiration date should be placed based on the time frame that the market is forming or is reaching the support and resistance. And in our case here, basically we are talking about a daily chart, so we need a bigger expiration date, but the same principle is valid on the 1 hour chart as well. Using the same principle that we've discussed so far on the first part, this would be a nice, just moving on with the analysis, a nice place to buy put options. Then by the time, as you can see, it is broken to the upside, would be a nice place to buy call options on support. Now here on this option would expire out of the money, for example, but these ones here, either end of day or end of week, these ones here were all being profitable, and so on and so on. Now move the area on the right side, exactly like we said, 102 and parity of and 101, and then move the area here from 0.98 to 0.97 like this, and see that every single time that the market is testing this area here, or this put option here, or this area here, to buy call options again, and to buy call options again, and to buy call options again, and so on and so on and so on. Even for the last test here, you will still have 2 days for the option to expire in the money every time price comes into support. So this is how powerful such patterns are, and this is how powerful market geometry is. Now, one more thing regarding market geometry. How about amplitude? What does it mean? What does it mean, amplitude? Well, you measure the length. You measure the length from the lower edge of your area to price section on the upper side, and then you copy it, of course, you clone it and put it the other way around, and that would be market geometry. That would be amplitude. This usually is happening in triangles, and that will give you a nice moment of, if you are trading the regular spot market, to exit the shorts, but if you are trading the regular the binary options, to go and buy call options every time market not goes into the amplitude here of a market geometry. So that would be something like what? That would be 0.9080. And then every time market goes, of course, in here, that would be 10704 to go and buy put option. This didn't come on the put option here, but nevertheless it comes at the support here. And even going with that support forward in time, it is still a nice place to see a bounce. Here a bounce, then support broken, turns into resistance, and we should go and buy put options on resistance. Now, all these trades here are being made on the daily chart on simple support and resistance areas and on simple market geometry analysis. Thank you for being here. More details to be found on the text that comes together with this mini educational series, and make sure you check on our Binary Options Academy. Every project that we have there, both on the fundamental side and on the technical side, as they represent the basics of trading. Have a great day. Bye bye.